Hi, I'm Carmen from On the Money Bookkeeping and welcome to our Business Academy. I'm a qualified accountant, registered BAS agent and fellow member of the Institute of Certified Bookkeepers, and I'm here to help answer many of your bookkeeping and business questions. So let's get started. Welcome to our next video. Today we're going to cover the Taxable Payments Annual Report, which I'm going to refer to as TPAR moving forward. So what is TPAR? This is a system of businesses having to report payments that they've made to their contractors during the financial year to the ATO. So why does TPAR exist in the first place? The ATO identified that a lot of contractors were receiving payments for their customers but not actually reporting it on their income tax returns or on their business activity statements. The ATO uses data matching to identify contractors who may not be reporting their income correctly. So data on the TPAR report is matched with contractor income tax returns and business activity statements. So the TPAR system first started in 2012 and initially just with the building and construction industry, and it's expanded over the years and now includes many other industries including cleaning services, road freight and courier services, IT services, security, investigation or surveillance services, and also now businesses that provide mixed services that include one of those defined industries above. And this is where it might catch you out. In the first 3 years of the system, the ATO recovered an additional $2.3 billion, so that's billion with a B, and that's liabilities of GST, PAYGW, which is the taxes that are withheld from employees' wages, and also income tax. This is just from the building and construction industry alone. In the last couple of years, more businesses need to report because they've increased their delivery services, even if this is only a small part of the main business's activities. It could mean that they need to file a TPAR now. So perhaps consider whether, due to lockdowns, you've actually been invoicing for a lot more freight. So what is it that needs to go on a TPAR? The contractor's business name, their address, which is often not on an invoice and needs to be collected separately, the ABN of the contractor, the gross amounts that have been paid, and that could be labour and materials combined, total GST, and that report needs to cover all of that information for the financial year for which you're making a report. Now there's a 10% rule for mixed industries, and this is where I said earlier that you might be caught out. So if at least 10% of your income is generated by one of those industries that are listed above, for example, freight and courier services, you might get caught by TPAR. Now we lodge our TPAR report directly through our accounting software Xero that we support, but business owners can lodge directly through the ATO Online Business Services platform. It's a good idea to prepare now because the due date is the 28th of August. When you roll into July, you're very busy with things like end of year payroll, potentially payroll tax, and also preparing your statement of remuneration for workers' compensation. And TPAR is just added to those list of responsibilities of things that you need to lodge just after the end of the financial year. It's a good idea to collect this data during the course of the year when you're doing your bookkeeping and ensuring that you have a collection system in place. So when it comes to the 28th of August, you can click a few buttons and lodge your TPAR. Remember to like, share and subscribe so that you're notified when our next video goes live next month.